And you guys here at my side, it's midnight. It's midnight here. So I'm going to take you through technical analysis. We are going to analysis in general. We are going to learn the types of analysis. I might use this outline that I have here, but sometimes I might go a bit out of it for additional purpose of some things that are not included here. I'll just be adding from my own knowledge. But we are going to walk through this today. We are going to know what is technical analysis. First of all, we are going to start with types of analysis because in any analysis you are doing, when you get into any markets, either forex market, either stock market, anything else, there's a different ways of approaching and analyzing the markets. The first way, it's technical analysis. That's the first thing you are considering. But another way of in the markets, we have analysis. So that is the second type of analysis. And the third one, we have this is called sentimental analysis. We are working on those three schemes. Like when you get into your market, and it depends in stocks, it depends in crypto, it depends on forex. We look on those three things. The first one is technical, second one is fundamental, and the third is sentimental. To be a good trader and to trade well, you must consider through those three analyses, both fundamental, technical, and sentimental. So I'm going to pass through technical, and I'm going to go through different ways of analyzing technically. When the times allows, maybe another day, I'm going to go on fundamental, and I think if I get a chance, I'll go specifically now on my strategy, on how I trade, on how I take my trade, on how I take my profits, and I manage my losses and everything. And I'll show you guys on how to manage your risk well in the future. But today we are going to start with knowing how to analyze. So speaking of those three things I said, technical analysis, fundamental analysis, and sentimental analysis, we are going to look on what is technical. I must give you a definition. I hope you guys are hearing me. You can just
Yes,
you
yes,
can
I
just
hear
raise
you.
hands. Okay, okay, okay. Okay, I'm not alone here. Okay. When you say technical analysis, this is what it means. It's analyzing the markets based on the patterns that the chart is forming. Technical analysis is analyzing the market basing on the chart patterns and the structures that the market or the chart is forming. So you'll be analyzing the market by looking on the charts. So when I say technical analysis, I mean something like this. I think you can see my screen here, right? Okay, so this is what we mean when we say technical analysis. It's like analyzing the markets by considering what the market is forming through these ups and down, ups and down. So the structure that the market is forming here, it what gives us a technical analysis. For example, a good example today, I made a technical analysis on Bitcoin. So what I did is look where it turned the last time. I found this region. This region is a potential of pulling Bitcoin back up again. So what I did, I marked with a line this area. When the market reach here, I'll find a potential entry to buy. But I came later on late. The market has already moved to this region. So what I did, looking for another potential area where the market will reverse, then buy again. So what I did, I waited for the market to retrace here. I took my buy here. And I also missed this buy. So I came when the market is almost somewhere here. I took my buy here, and I had my take profit here. So that's an example of technical analysis. So you just go and analyze the markets by looking what the chart is forming, the structures, the areas the market is touching, and other things. That's how we know this is technical analysis. So that's what we regard on when we say technical analysis. Uh, come, I'll come back. I'll come back slow. You can't just tell me. Come back and just giving of technical analysis. So this is how we are looking on the chart. Like when we say technical analysis, we regard what the market is forming, the structures, the charts, what are the uh, lines, what are the regions that the market is passing, what are the areas the market has touched and show a reaction. So those are the things we are considering while looking on technical analysis. Coming on the second theme, that is fundamental analysis, I'm just giving you an overview. I'm not going deep into it, so I can come back to technical analysis. Fundamental analysis is analyzing the market based on uh, the economic events or the news of a certain stock or a certain currency or a certain uh, commodity you are trading. So fundamental is a little bit different from technical because on fundamental, we look on the major economic events or news occurring in a certain area. For example, uh, one of the fundamental we can say is what Osagefo posted today, getting on this new week. Trump had initiated some certain tariffs on Canada and Mexico and China. So those fundamental news and what Trump did and what Trump said caused some movement in the market. As when you look on the market today, when it was opening this morning, you'll see that the market has opened with different big gaps. Like when you look on these different pairs, you'll see the market has opened with huge gaps. But you can see now the market has a tendency of filling those gaps, so they get lost. For example, when you look here on US GBP, this gap here was formed due to fundamental. When you come to USD card where the tariffs were imposed, you can see here the dollar gained more strength, exceeding the Canadian dollar because of the tariffs that Trump initiated on Canada. So these are the ways also we can regard as a fundamental. Okay, so these gaps are caused by what Trump said during the weekend. Like, I'm going to initiate the tariffs against Canada, and you should know, guys, when there are tariffs initiated over a certain country, like you can see, Canada and USA are very neighbor. So once they initiate tariffs against Canada, it means they are going to block some of their importation to USA. They are going to block some of exportation from USA to Canada. So that makes the Canadian economy going lower. So that's why the market opened with this gap in reaction to what Trump said. Okay, so this is the picture of how fundamental can affect our technical analysis. So that's just an overview of fundamental. And the other last thing we can do on analysis is sentimental analysis. That's the last thing I said. Which sentimental analysis means that we analyze the markets or we do some decision on the market based on what the majority of people or financial institutions are saying over a certain pair. Like, what are the economists saying on dollar? What are the traders and economists saying on US dollar, or maybe what are they saying on a certain stock, like maybe Apple stock or Facebook stock or anything? Or what are the investors and economists saying against gold? So we do those suggestions, and they help us to make decisions on what we are going to do on the market. So based on those three things, like technical, fundamental, and sentimental, are what make a trader be able to make decisions on the market on either to buy a certain instrument or a certain currency or certain stocks, either to buy or to sell. So those are the three things that a person can consider on making decisions. So coming back on our first thing we are considering, that is what we are considering today is technical analysis. So I can say technical analysis is the mother of all analysis. Like what technical says, everything else tends to fall on it. So most of the time, focus on your life as a trader. If you want to become a perfect trader, put all your efforts, put all your energy in sorry guys, 1 minute. I want to check. So put all your efforts on mastering the technicals because these are the what runs the market. Any trader to become perfect, you must master the art of technical analysis. Okay. So I don't know the education system in Ghana, but I can give this example. I don't know if it is related. I mean, in your country, I don't know if this you can relate it, but in our country, we have this subject called geography. And what we study in this sometimes, they give you uh, a set of data. They give you a group of data or a set of data and then tell you, present this data in a line graph or a bar graph. I don't know if you guys have something like that in your education system, but at a certain level, we learn that thing. So uh, what I took as an example that if this technique you see here, these charts, like you see these ups and down, everything here, this is all uh, a set of data presented in this bar graph. We can call this bar graph as what we study in school. But I don't know if in your country you have that. But this is what I can relate on our side on our education system. Like they give you a set of data to present it in a bar graph. So what you see on this is a set of data that has been presented in this graph. So for you to know or what to do or for you to able to be to trade well on these markets, you have to master the art of reading what has been hidden behind these structures or behind this presentation of data. So for you to start as a first step coming to the markets and knowing this technical analysis, uh, as for the guideline here, I have already give you the reason why you should use technical instead of fundamental analysis because this is the master. It is the mother of all analysis. Everything else falls under this category. Everything else follows the technical. So that's why you should master the well on how to analyze the market technically. If you manage to master that, then you're going to be a best trader ever existed. Because even you can still use fundamental and sentimental as an addition to what you know on technical. But what is the mother is you have to master this technical analysis. So for you, uh, for you to get in the market for the first time, yes, you're very correct. Technical analysis is better than fundamental. 100%. It's better. It's better. But let me put it in this way. Uh, what fundamental does to the market is just adding volatility to what you have analyzed on the technical. So you analyze technically, then you regard on fundamentals on what they say supporting on your buyers. What fundamental does is just supporting your bias on what you have decided through technical. So you have to analyze technically, then go and regard fundamentally. Does this technical align with what I have seen fundamentally? Because you might analyze technically and you see maybe dollar is going to get strong, but at the same time, Trump is speaking, and there are some things Trump might say that can affect the markets. So you regard fundamental for you to know either the decisions you have made on technical you are going to be on a long time basis or a short time basis, or are you going to regard them for a long period of time or for a short period of time? But always the market will fall under the technical part. So make sure you've mastered the technical part well. So let me take you. Sorry guys, can you please mute your mic so that I cannot get interfered? So the first thing you must consider as you just approach your markets, the first thing, and I tell you this like very confidently, and I'm very positive in this. The first thing you must consider while or just the moment you approach your chart, or the moment you open your chart, either it's on trading view or it's on a MetaTrader 4 or 5, the first thing you must consider is you must know the trend of the market. You must know where the market is going, because uh, the markets always have three directions. The markets always have three moves, nothing more than that. Markets are either doing this, so these are the three moves that the markets are making. Always, nothing more out of this. These two, then the third one is this. These are the three moves that the market is always making. This one, it's what we call an uptrend. I hope you guys are catching me and you're taking note eventually, because these are the basic things now that we are about to get hot here the in the analysis. The first thing you must consider on the market is to look for these three things here. The first thing is this one. This is called an uptrend. You must know either your market is either on these three moves. There is no time that the market is not on these three moves. If either the market is on this uptrend, we call it an uptrend, or this one, it's called a downtrend. You must catch me there careful, guys. Or this one, we call it consolidation, that the market is not uptrending or downtrending, so it's consolidating. So it's either the market is uptrending, downtrending, or consolidating. All your decisions that you're making on the markets, or to buy or to sell, are mainly based on these three things. When the market is uptrending, that's when you are making decisions. When the markets are downtrending, that's when you make decisions. But when the market is consolidating, here I say most of the 90% chance don't trade when the market is consolidating. So the first thing you look when you get into your market is to know, what is the market doing? Is it uptrending? Is it downtrending? Is it consolidating? If the market is uptrending, that's when you're trading. If the market is downtrending, that's when you are trading. If the market is consolidating, I'm repeating this because it's the most important part that might help you on your future in trading. When the market is consolidating, we say this is a no trading zone. Stay away from this market. Wait until either the market breaks up and starts uptrending, or breaks down and starts downtrending. What I'm showing here, it might be look very clear because it's just on a sketch, or I'm just drawing it in the bare hand. But when it comes to the real chart like this one, this is where you have to find these trends. Either the market is uptrending, downtrending, or consolidating. But right now, keep this in mind. Before you do anything in your chart, the first thing you must consider, just know either the market is uptrending, downtrending, or consolidating. When the market is uptrending, we trade. When the market is downtrending, we trade. But when the market is consolidating, we don't trade. Keep that in mind. Now, or when you get into your markets, the first thing I told you to analyze where the market is, and it's uptrending, downtrending, or consolidating. That's the first step to identify. So if you know what phase the market is, it is uptrending, downtrending, or consolidating. That's when you make decisions on what you're going to do on that specific pair or a specific crypto or a specific stock or any instrument you are trading. So the decisions you're making, the first thing you consider that can help you to make those decisions is to know the trend on the market. So, for example, I get in a chart, I see the market is on a good uptrend like this. The market is on a good uptrend. Now, someone may ask, Ezra, how do you know the market is uptrending? Or how do you know the market is downtrending? Or how do you know the market is consolidating? Right? Now, let me help you, because this is the first step you have to identify while getting into your markets. Now, this is how you identify. When you see the market moving up, moving down, moving up, moving down, moving up, moving down, moving up, and every time the market moves up, it breaks the previous high it formed. You see, the market is moving up by break the previous high and forming a new high. When the market comes down to retest, it comes down but does not break the previous low. Catch me well on this. I'm repeating again. When you see the market is forming an high, while forming this high, it breaks the previous high. And when it's coming down to form a low, this low does not exceed the previous low. It gives us a picture that this market is uptrending. So when you enter in a pair, look for the highs and look for the lows. And when you look for a high and you look for a low, wait for the market to break an high. Once it's high, it forms high. This low formed. When it does not or it fails to break this previous low, and it forms another high, breaking the previous high. This shows that your market is up trending. I hope you're catching me well there. I'm going as slow as possible. When you see the market is moving up, moving down, and it breaks the previous high, and it forms a new high. And this new high formed, when it comes to retesting a low, this low does not break this previous low. It means this market has failed to go down. It means it's an uptrend. So this series of market creating higher highs and higher low, higher highs and higher low and higher highs, it means this market is uptrending. I hope you're getting my point there very clearly. So so for you to know this market is uptrending is for you to look what the market creating. Is it creating a new highs or new lows? As for an uptrend, the market must create new higher highs and creating lows that do not break the previous lows. So once you see a picture like this on the market, there you know that this market is uptrending. I hope you're getting me very clearly. So the same thing we are looking on the downtrend, just the vice versa. For an uptrend, the market is creating new highs, but for a downtrend, when the market creates an high, then it creates a low, and this low created breaks the previous low. Okay, this market breaks the previous low, and once the market comes back to create an high, this high does not exceed the previous high. Now we know the market is downtrending. Market breaks the previous low, and once it creates a new low, it retests. Once it retests, does not break the previous high. So this shows that this market is downtrending. Create new low, new lower high, new low, new lower high, and new low. So this shows us the market is going down. So the market might be crazy like this. You don't get good picture like what I have. You can see lows and highs, lows and highs, lows and highs. And these lows and highs are created in a series of going somewhere. Like when you see from this point, I've seen a message here. Let me look. In uptrending situation, what will be the trending decision? Is it a buy? I'll come to that point. I'll come to that point of buying and selling. Just right now, get my concept. Get my concept of knowing the trend. I'll just explain everything else. Now let's move one thing at a time. let's consider how to know the trend first. So once you did see this, like in this chart, for you to when you look here, you can see market creates a high, creates a low, creates a new high, creates a low, creates a high, creates a low, creates a high, creates a low, creates a high. What you see here is an uptrend, although it's not clear like what I have drawn here, but this is how the markets are now. It cannot be clear like what I have drawn. But the picture you can see, a low, a high, a low, a high. A new high breaks the previous high, forming a low. This low does not break the previous low, forming another high. So this is to show that the market is uptrending. Now, on an uptrend, what we are going to do is we are going to look for buys. Always focus on looking for the buys in an uptrend, right? So once you look for buys in an uptrend, it will be easy for you to not get those unnecessary losses because you're going to catch every move that the market is going to make that are rapid. Because in this trend, always in the trend, you trade by following what the trend is doing. And the market moves in two phases. It moves in in an uptrend now, it moves in a rapid move, then a corrective move, then a rapid move, then a corrective move, a rapid move, then a corrective move. So the same thing always. Once you are trading, you must look for this rapid on uptrend. When you are trading on uptrend, always you must focus on looking for these rapid moves and not this correction. So that's why I'm saying on an uptrending market, you're looking for buys because that's when now you'll catch these rapid moves and not this correction. So what you're going to do is just regarding after every correction, you're going to take your buy. After every correction, you take your buy. After every correction, you take your buy. Now that's how we say trade according to the trend. Now you're moving with the trend, and that's what makes it to trade. On the downtrend, the same picture. What you're going to look on is those rapid moves of selling. As we say, we trade according to the trend. So once the market creates a rapid sell and a corrective buy, a rapid sell and a corrective buy, and a rapid sell and a corrective buy, and always a rapid sell. Now this is what we are going to look for. Looking for these rapid sells. After every correction, we sell. After correction, we sell. Now, this is I've given you a picture on when the market is uptrending and downtrending. And a person might ask, Mr. Ezra, what about the market is consolidating like this place here? What are we going to do? As I said, for you to know the consolidation, it means the market does not break highs or does not break lows. So it means it's not uptrending or downtrending. The market is not creating any high above the previous high, so it's not uptrending. Also, the market is not creating lows that are exceeding the previous low. So we know that the market is consolidating. When the market is uptrending or downtrending, what I advise at the 90% chance, don't trade at this pair. That's why you see we have a lot of pairs. Once you see it, maybe Euro USD is consolidating, you can stay out of it and focus on another thing. And maybe you see USD JPY is consolidating, you can stay out of it and focus on another pair. So 90% of the time, there's a high probability of losing trading while the market is consolidating because we don't have any clear direction. Because once you buy, we expect the market to go up. And once you sell, we expect the market to go down. But once it's consolidated, the market is neither going up nor going down. And we have no any direction, like we don't trade sideways. Like we say, we are going to trade not a buy or a sell, we're trading a sideways. There's nothing like that. So what we're always focusing is either on a buy or on a sell. So focus on those two trends, like an uptrend and a downtrend. So the first thing, as you have already marked your potential trend, you have already known that the market is uptrending or the market is downtrending. What we're going to focus on next is marking our key levels. Some people might call it support and resistance. Some may call it supply and demand. Some may call it whatever they might call it. But what I say, it's key levels. Those key levels are those areas that the market uh, might show a little bit of reaction once the market reach on that area. Okay, so once the market reach a certain region, it shows some reactions. Those areas I call them key level. Sometimes in smart money we call them supply and demand zones, or sometimes they call it support and resistance. But uh, the qualities of support and resistance are a bit different from the qualities of a good supply and a supply and a demand zone. So they might differ a little bit, but they all come back to the key levels. So once you know the trend of the market, you must mark the key levels, which those key levels are the ones which are going to give you uh, the potentiality of knowing when the market comes back to this area, what am I going to do? It's either am I going to sell or to buy. For as you know, in a downtrend, we are looking for sales. As you can see, this USD here is downtrending. So we are looking for sales. Now, where am I going to get my sales in? Because just because the market is selling, it does not mean I'm just going to sell at any point. No, you must know the key levels that the market might show a reaction going to your trend again. For example, this market was selling, it was a good downtrend, but I had to mark this key level. Once the market comes back to this region, I'm going to get a sell. So what I did, I marked this key level. Some may call it a resistance area, but I call it supply zone. So what is this key level? Why is it a key level? It's because from this point, once the market reached at this point, we experienced a rapid move going to our direction of the trend. So I am sure when the market comes back to this key level again, I might experience another rapid move going to our trend direction. So every time I'm going to look for my trend and I know now this is a downtrend, what else am I going to do is looking for a key level to catch the trend. We say always you must look for a key level to catch the trend. So as I have seen market going down, I'm looking for a key level. When the market comes back to that level, I'm going to catch the direction of my trend. So what I did, I marked this area. This area is when the market moved from this area, it experienced a rapid move to my direction of the trend. So here, there's a potential selling power that is existing over this region. So once the market comes back to this point, I'm going to look for sales going with my trend. I hope you're catching me very well. As we said, always go with the trend. So as we're going with the trend, we must mark those key levels that the market will experience a reaction going with our trend.